seat. Good afternoon. All good. Thank you, Jens, for this kind introduction. No further introductions needed. A very expert panel, I suppose. I like this kind of framing that we have been given here. Private banking from a high touch to tech-enabled, meaning from a very traditional sort of elderly clientele that likes personal interactions to maybe something else. Let's maybe start with the bankers and not with the consultant in this group. Olivier, how do you see this from high touch to tech enabled? Is this a reality? Is it either or? Is it both? A bit of both, or where is this going?
I think we had this interesting conversation this morning about hybrid, whether or not it will replace or not the banker. I think the answer, at least from my perspective, is not. We can do the best of both worlds, having a strong digital platform, strong digital processes, AI, and all that stuff, and keeping the human touch. And I think that's what the clients are looking for.
Thank you very much. And Iraklis, when I think of Bergos, and forgive me if I'm wrong, but I think of very much high touch. At least has a reputation of being a somewhat, very traditional, very conservative private bank with a maybe conservative clientele, but also doing steps towards obviously modernization, digitalization. How do you guys see that from high touch to tech enabled?
Hi everybody. For us, it's important that we enable the RM, that he's able to deliver the job to the client in a way that the client perceives it tailor-made, but in the back or behind the scenes, we try to automate as much of the, I would say, not value-creating processes, and there where the client, so that the client relationship manager can spend more time with the client to find suitable investment solutions. So we try to enable their RM as an interface for our bank instead of the client itself.
Yep. I think, Olivier, before you've already touched upon the elephant in the room, which is often WhatsApp in modern client situations. So Iraklis, let's suppose you have I'm making this up, a German client on his golf course that sends a WhatsApp message to his RM, please sell my BMW shares. What happens afterwards? And can you act upon this?
I suppose that the RM use then the proper channels to contact or to coming back to the client, maybe by phone or by email, and up already with a proposal and just like to provide the information at his fingertips to accept or like if it's just, as you said, like selling a stock, depending on what our house view is and what it means for his portfolio, as opposed could be just executing or confirming it then, or it's like making a counter idea in terms of selling it and buy something else to optimize the portfolio, or being more like it's better to stay with it and wait for a second and have.
What would be the official house policy? Is it sort of shades of grey? Can you do it or not? You're not really supposed to do it, but you still do it, or how does the bank officially deal with it?
I think if the client sends it to us, I think we're off the hook.
You create a group conversation with the compliance and ask the compliance you're allowed or not to proceed.
But yeah, I'm actually not 100% sure how every RM in our bank would proceed here. But the way I put it was like I imagined it that way.
Yeah. Yes. Now, Katharina, you may have a bit of a bird's eye view on this industry, being a consultant and digitalization expert for this entire industry. How would you say are Swiss banks, Swiss private banks, high touch or tech enabled or both?
Well, maybe just for the beginning, I'm not a typical consultant. I was sitting on your side. I worked in the private bank in Luxembourg overlooking the Latin American market, so that surely was very, very high touch. And I don't know how often I flew over to Latin America to get everything sorted. And from my point of view, honestly, you should not lose the personal touch. It's very well needed, but I see it more like that we personalize and enhance the personalized processes with digital tools and digital assets, but they should not replace the relationship manager. So the overall goal shall be that we have an empathetic service at any time, anywhere, and support the client with a good client interaction.
Yeah. So when we shift to clients, which is, I guess, ultimately what drives all this, so client expectations, how have they evolved? Is that still sort of this old gentleman's industry, or are there new client profiles coming, younger, more diverse clients that maybe have different interaction and engagement preferences? How do you guys see that? How have client expectations and preferences been evolving?
I believe in terms of e-banking or like the digital platform, they expect things very fast, like commodity service, like getting their performance report needs to be at your fingertips. If you want to have some information about your trading opinion or like trading ideas from the bank, you would also want them at your fingertips, and the possibility to trade stocks or bonds or whatever is in our investment portfolio. They also want to do it as fast as possible, as soon as possible. I think this was different before, where usually we have also some clients who just call if they want to do something. But we believe the shift comes more to a digital perspective for most of the clients who want to trade by themselves. And for advisory, it goes in this hybrid mode. And yeah, we believe that getting the client relationship manager together to enable them is a better way to just do it on the e-banking app. At the moment, for us, it could change.
I think it's true. I think the common feedback we had from clients is that they are comparing ourselves with other industries. Like I mentioned Amazon, but I can mention also newcomers, Revolut, and so on. And the commonalities around that players is they are easy to do business with. And sometimes we, due to procedure, lack of digital tools, and so on and so forth, we are losing the fact that we need to make that easy for a client. And I think in that sense, digital tools can help.
And if I may follow up on that, which client profile compares you to Google? Is it the 80-year-old retired executive, or is it the 35-year-old
Monaco market is
crypto
a bit,
bro?
Monaco market is a bit different, I think, than Switzerland. But we see many entrepreneurs coming in, and also crypto-rich clients that are used to that kind of simplicity in doing business, and also clients coming from other booking centers like Dubai, for example. Or Singapore, for example, as well. I think this financial center has encompassed the easy to do business with, driven and mindset.
Maybe to add here, which client is that? What we see more and more is that it's the children of clients or from established clients, and usually from a 60-year-old client, it was like the 40-year-old child, but now they are to the 25-year-old, which coming rather from university. They're not all of them there, but we see that the momentum change, that we have more and more of those advisors to our clients, let's call them.
And I think it's the generation change, right? Also, the money is actually moving to the next generation. That's what it's driving in Switzerland. So, and I think that's the tricky part also for the banks, because you still have like the parents who are like 60, 70 years old, but they're handing over the money to the next generation, being the 30, 40 years old. And that's where you also have to take care of all the different channels, right? One is walking into the branch, the other one is going to call you. And for example, I have 2 kids, they're very small, they will never see a bank inside. So you have to take care of all the channels at the same time right now. And that's what's troublesome for the banks, I believe, right now.
Yeah, and I guess omni-channel is something, it sounds very good. It's obviously, as a client, I like omni-channel. When you look, and maybe you, Katharina, you're maybe in a good position to answer this, when you look at the adoption and transformation from a bank's perspective, I would assume it's often a difficult road to get towards omni-channel with lots of hiccups. Are there any do's and don'ts, any horror stories you can share? What can go wrong when doing this?
Horror stories, maybe no. I mean, as you say, they are all at the very beginning, I would say, right? And yes, omni-channel is the thing, what everyone is talking about right now, but the tricky part is that you have to have basically the same process in the back end, right? But you have different angles from the beginning. So either I call you, or I have started in my mobile app or in e-banking, and then ideally in the perfect world, once I submit the process, or I take it over because I walked into to the office with my relationship manager, that they don't have to tackle in the same data, right? And what is an issue for most of the banks, what we have seen is actually a core banking system, right? Because it's very, very old-fashioned. So a solution, what a lot of banks are doing right now is they're pulling in a layer. And from there, you can navigate and faster and innovate all those processes. So, but the core banking is often the root cause for a lot of the troubles.
I see both bankers nodding. Is that, or has that been the case in your cases?
I must admit, yes, because we are just changing our partner with Avaloq. So yes, core banking it can be a key showstopper in your digital agenda, but most importantly, I would say the data behind it, or the exploitation of the data that you are doing from a core banking are crucial in your data journey and also in digital journey.
Yeah, it's the same for us. We changed our core banking system 2.5 years ago. And I believe we're still not fully at 100% where we wanted to be.
Yes. What I always wondered, when you undertake such initiative, let's say, for illustration's sake, let's say you want to go with UnBlue and you want to implement UnBlue, how do you build a business case around that? Or what is the actual business case? Is it a growth case or cost or sort of both? Or you just have to do it because others are doing it? Or how do you convince senior management to go omni-channel?
True story. No, of course there is a growth behind it, because the more interaction you have with a client, the more business you do with them. Also a compliance business case for sure. And in terms of integration, I must say that we are in the middle of integration with Avaloq, and those guys from UnBlue has a pre-integration kit that's working very, very well with them. We have integrated, I mentioned in my presentation, many third-party providers. And UnBlue is really integrated deeply into Avaloq, so that was an enormous plus for us in terms of timing, project, and so on.
Well, I believe it must be a mix of both. I mean, it needs to be a growth case at some point, but at some point you need also to make your workforce more efficient, and that's the ugly truth. At some point, yeah. That's how it is. You need to have both sides.
To make a compelling case, yeah, I assume. Looking at compliance, another big topic in private banking, particularly in a cross-border context. Any special things you need to be aware of when having an omni-channel solution in place, or when interacting with clients through such means? Any do's and don'ts?
You have 3 hours? No. At least on my side, again, the context, Monaco regulatory context is a bit different than Switzerland, so I cannot comment. But of course, when you are going to your compliance officer and you say you're going to transact with a client through mobile, and this client can be, I don't know, in Afghanistan or US or Cuba and so on. Every red lights are all over the place, but if you explain how it works, how the solution works, how the service is delivered, I think it's a matter of time to convince. But from a compliance point of view, at least, we've made it. I don't know in Switzerland the context of cross-border policy or rules, but if you can comment.
Yeah, they're quite strict, but I think the overall thing what you need to do is have compliance in your boat sitting next to you from day one. Because it's not only about the rules. Yes, there are rules and we have to stick to them, but it's also a big part is change management, right? You need to change their mind, because and I'm sorry when any compliance officer is here in the room, but they're very strict. They read it black and white, but they have to change and see, okay, with digitalization, the mind is changing, so they cannot stick, okay, the client has to come to my branch. No, this is not going to work. If, as you say, your client wants to have it on the tip and I want to do that trade now, then we cannot wait until he comes to the branch, right? So it's a lot of change management also for the compliance officers, but also for the relationship managers, right? And I think it's one of the overall things which you need to do to get them in your boat sitting next to you and changing their mind also a bit.
Iraklis, would you agree?
Yeah, maybe just to add one thing is, what's important to us is after the onboarding, just to have the right contractual framework in place with the client to be sure that whatever we can offer, whatever channel we can offer to the client is compliant with their jurisdiction, with our jurisdiction, and then I think it can be very individual.
And Katharina, when you support clients in such undertakings, again, maybe from a compliance or risk perspective, anything that they often do wrong or any don'ts that you have observed?
Well, I think there is no right and wrong, right? It's up to the bank to decide in the end how much risk are they willing to take. But we obviously try to bring other players to the table to show them, okay, other people or other clients of us have done it this way. So just to change, if they're very strict to their rules, we try to open them up and see, okay, this is what the market is doing. And it is possible because it's not breaking any laws. We don't want our clients to break any laws, but it's often that they need kind of like that small push to actually go that direction.
Yeah. And now, I mean, Olivier, you've shared some impressive statistics before, but now, I guess now that you have it, was it worth it? Is there has the business case materialized?
Next year.
Was it? Yeah.
That was the ambition, but next year I will be able to deliver concretely result and hopefully provide any feedback. But what I showcase are just ambition at the moment.
And how have RMs reacted, or did the front office in general?
Honestly, very positively. Again, like I mentioned, RM wants to do business with clients in a swiftly manner, in a responsive manner, anytime. We had a testimonial from Safra Sarrazin earlier today, and actually, day in, day out, even at midnight, where the client is in the bus, they want to contact their banker. So that is a game changer for them. In the secure way, that is a game changer. So the reactions so far are really, really, really positive.
And the Iraklis, maybe in Bergos' case, if let's say, suppose you want to go down that route at some point, how do you expect front office to behave? Or will there be resistance or an openness or a mix? Or?
I mean, also here, I think we should not push it to the RMs. We should make a hybrid approach for them who want to use it. If they have the proper clients, they want to use it, we enable them. If they don't want to, because some of our relationship manager have clients also more than 90 years old. Some of them cannot really walk. If you meet them, and it's really interesting to see how the segmentation works. And for them, wouldn't push an RM to use this tool. But it needs to be like the right way for every person or every RM to serve their client.
For me, it's refreshing to see. I sometimes, when I talk to smaller private banks, what I sometimes heard was a bit of a resistance towards such omni-channel capabilities, that they would say, we're not a big bank, what we are precisely high touch. This is our value proposition. We cannot compete with whatever UBS spending, hundreds of millions on this. We're very small focus. We have RMs that know their clients in and out. But it's refreshing to see that you seem to demonstrate that both are possible.
And I think one thing what a bank should not do, and I heard it from you and also from the other banks, is it's not a big bang approach, right? So it's incremental, so you start slow with one use case and you push it to them with a pilot, and then the next one, so you take them on the ride with you, right? And with that, they don't even realize that they have those capabilities, and then once they realize, they don't even think, okay, that's not new, that's digital. So it's not a big bang. I have never seen that.
I agree, yeah. It's like the change management is very important to get them on board.
Yeah. Now let's say we have this in a perfect world, and let's look ahead a bit. Is there a broader play around this omni-channel? I'm thinking around ecosystems, open banking, partnerships. Is there sort of a broader strategic play that could open up with such capabilities, Katharina?
Sure, there is, right? I think in the next years, what we will see is that banking is way more embedded in our lives, meaning that it is hyper-personalized, ideally, that I can do wherever, whatever I want to do with my bank. So even when I'm on my vacation, that my bank realizes, okay, Katharina is on vacation, so that I get an offer directly. So surely it will be more embedded. You have mentioned open banking. I think it will even move to open finance, so that we have a big ecosystem. And for me, a bank and also the fintechs, they are co-creating services. So they are not battling each other. They're actually helping each other. Because the banks, they are being trusted, and the fintechs, they actually are more agile, innovative, and it also helps the banks that they can use or be faster in the innovative section. So for me, it's very personalized and embedded in my life.
And also we are providing much more services, private markets. 5 years before, no one's traded crypto. Now private banks are custodying crypto, trading crypto. 10 years before, no one's want to have their infrastructure on the cloud. Everyone does it, so we are changing slowly but surely, not as fast as the newcomers and I would say the fintechs, like you mentioned, but we adapt, and that's where we evolve.
Iraklis?
Yeah, exactly. I mean, adding again as a person to that, since it becomes more embedded in our daily life, decision making will be much faster and much easier. Like rebalancing a portfolio doesn't take maybe weeks until you're sending letters to the client. He needs to sign and confirm it, and after 2 weeks, the value is somewhere, the price of the stocks is somewhere else. You can do it in a meeting. You can do it faster. You can do it on your mobile. You send proposals. You get the confirmation. You document everything, which would be cumbersome in the past. I mean, it becomes very much, the pace will rapidly increase, I believe, and we need to, like our banks needs to become, I believe, more agile to find suitable investment ideas to the client, which are really tailoring to their needs and understanding the client better, and having this feedback loop because it becomes faster. We need to have more ideas which we can put to the client, which are but also tailored by understanding the client better, and this feedback loop will become much faster than it is today.
And what ultimately drives such innovations? Is it clients who just want to do more stuff or invest in new things, or is it competition, new players, internationalization, or what hinders it maybe? Regulation, or what is behind such innovation?
Money.
The bank's desire to make even more money.
It depends on the incentive on your RM, but usually the RM needs to be hungry and needs to, like, you eat what you kill. That's at the end of the day.
So it helps them to hunt in new ecosystems.
No, it's a mix, I think. It's a mix from client requirement first, but also cost to serve. Typically, this morning we've seen automatization and AI. I think if you invest a couple of millions or couple of hundreds in AI, you expect return on the investment, so lower cost to serve, or at least addressing a larger scope of clients or larger scope of activities. And then third, I'm focusing on that, regulatory compliance.
Yeah, and what we should not forget is competition, right? Like the traditional banks, they have a lot of competition from the fintechs, from the neobanks. So it's always better to get them on board and partner up with them, with the fintechs, than having them as a competitor, because they might steal your clients. So it drives
competition.
Yeah.
Very good. I think before we open up for there maybe some questions from the audience, maybe my final question to our experts. Let's suppose we look ahead, we meet again. I hope we meet again next year at on UNBLU's Impact Day. But let's say we meet again in 3 years' time. How will Swiss private banks have evolved? What will be different in 2028, 2029, and ahead? Maybe, I don't know, start with the bankers, maybe with your own banks. How will your bank be different 3 years from now?
Adding to the comment about competition, I believe there will be some consolidation on the private banking side, or potentially must be, in terms of to be more competitive, in terms of getting certain costs down for certain, and some of the innovations you can only afford if you can invest more. So I believe this will drive some of consolidation in the industry. And at the end, it will also increase client satisfaction, and I think also like the standard of your banking products will increase quite a lot, because Switzerland is already a quite competitive place compared to like other private markets and I say not Monaco, but maybe somewhere else in Europe. If you look around, there are not so many competitive areas. And yeah, we will consolidate. And
At least for clients, that sounds like good things ahead for private banking clients.
I mean, it becomes easier to compare and to understand what, yeah. But maybe some brands will be removed or will be joined or merged. But maybe 3 years is a little bit slow, but maybe in 5 to 6 years.
And Olivier,
Yeah,
for CMB?
at least from a Monaco perspective, I think in 3 years from now, I think the standardization of, I would say, operation processes and I would say back-end, middle office processes will evolve. Automation, AI, keeping the high touch that you emphasize on the front office. Client satisfaction, I agree with you. It will go through high touch anyway. Because even if you are a billionaire or millionaire, I would say you expect digital service that is high-end, but also high touch at the same time. In terms of market, Monaco is a bit different than Switzerland, of course, but keeping our international clientele, we are covering more than 130 nationalities. But in the meantime, these 113 nationalities adding a lot of complexity in terms of tax, regulatory, cross-border, and so on. So technology will help in simplifying this, hopefully.
Good point, yeah.
And I also have to say, I think 3 years from now is a bit difficult, because I remember when I joined consulting 10 years ago, we talked about virtual branches already. We're not there yet. But what I do hope for the Swiss banks in the next 3 years, that they get their data journey right, because this is one of the most important things that they need to take care of. And with that good basis and a service layer, they can encounter all new processes.
The data journeys or the data...
The data journey and the data governance, because this is the basis for everything.
Yep.
And
which
that will
I guess is good news also for firms like BearingPoint. So one thing is for sure, they will need external support also going forward. Thank you so much. Are there questions from the audience to our experts?
Okay, I'll throw it, but controlled. Very good, bravo.
Hello. Okay. So what drive my attention was the mentioning of Aladdin for AI usage for asset management, I guess. So do you think for the future that it will be more demanded even by the customers, that they will ask, for example, that part of their portfolio will be traded automatically by AI? And maybe if you consider it, that maybe you can challenge your RMs, that they can, like in simulation, maybe play against AI, and you will see if they are investing better or AI is performing better. So what do you think about this idea, like for the future? Yeah.
So the way we have designed it so far, there is always a human in the loop, meaning that the AI does 60-70% of the investment proposition preparation, so matching our in-house CIO view, and also market signal, plus on top BlackRock, I would say portfolio analytics. So it brings to 60-70% of the proposition. Then the adding 30% is the banker. So to the question, am I replacing bankers by AI? Definitely not at this stage. We'll see how it goes in next 3 to 5 years. Is the AI is better than the investment advisor? Today not, but I think the pace that AI is driving, maybe I will change my mind in a couple of years.
Thank you.
Maybe to add, I believe the client already can do that by investing in a quant hedge fund who's doing most of the decision based on a quantitative algorithm. If we would do it as Bergos, I don't think so. But as you said, like there will be a client in the loop, but all the recommendations will become highly automated, I suppose.
More questions? Last chance.
Mm-hmm.
All clear? If that is the case, thank you very much for your attention. Thank you to our panel. Thank you, Katharina. Thank you, Olivier, Thank you, Iraklis. I guess we have a break now, and I'm handing back to Jens.
Absolutely. So thank you so
Thank you.
much.